Good afternoon, everybody. Welcome to a Friday market close. So not only are we closing out the day, we're closing out the week. We do, of course, have a red market, as you can see with the sign behind me in the red position. I was hoping for a green market today. I will definitely say that, but the stock market gods decided nope, no red or no green for you. So we definitely are finishing off in a red market. Okay, let's very quickly let's jump right into the charts, and we'll just see where we're sitting at as the day as the day comes to an end. So as you can see, we've got the TSX down about 0.5%, so negative 0.47%. S&P 500, they're red too, but not by a lot. 0.16% down. The NASDAQ is still in the green, so they're looking fine. Well, they're looking flat. Gold is up 1.42%. Silver's up almost 2%, not too shabby. WTI edging up a little bit, but Bitcoin is down about 2%. So an interesting market. All right, well, let's take a look at this heat map. Let's see what's going on. Holy banana bread. This is a lot of red. This is a lot of red. Yeah, look at this. The bank's pretty much red right across the board. TD's only in it to a little bit, but it's still red. It's still red. C&Q is down. Those of you who may not have noticed this, C&Q did a stock split this week. So I know everybody's been talking about about our good old friends NVIDIA, but C&Q also, they did a 2-to-1. So that might have been a surprise if you were looking at your C&Q and all of a sudden your shares doubled, but the price cut in half. But C&Q did a a stock split. Woo, here we go. We actually last night we went an hour and a half on the exclusive channel members live stream. It was a lot of fun. It was a lot of fun. Definitely. If we talked basically about retirement from basically the day you start investing all the way up to retirement. We had a lot of material that we covered. If that is something you do want to see, definitely jump into the channel membership. It's basically the cost of a price of coffee a month. So not too shabby there. Or you can always wait until you win one and then come on back, because we do throw out the free one every so often. So actually, you know what? I said the word free and I said membership. Let's do one. We'll do one right now, just because we had such a good time last night. So here we go. It's happening. You guys are watching this whole. Oh, you guys are starting to see that weird thing. I'll get out of here. Vineet has won a membership. So there you go, Vineet. You can go and check out that live stream from last night. All right, let's get back. Let's get back to our heat map. So yeah, this is pretty intense. Ooh, look at this. Alimentation Couche-Tard. They're 4% down. Holy cow. Yeah, not looking too good. The ETFs, same kind of idea. A lot of red in the ETFs as well. Even our good old flagship VFV is down a little bit. So that's not too good. Not a great day. All right, looking at the U.S. You remember how we said the NASDAQ is in the green? Here's why. Look at this. NVIDIA still up 1.58%. So they're doing fantastic. If we pull them up right now, look at this. 131.17. So when we were talking about them hitting 1,300 before the split, they passed it. They've passed it. This is fantastic. So NVIDIA is still going strong. And I know that there's a lot of people in the community that are over diversified into NVIDIA, and you're smiling right now. So enjoy that. Don't be afraid to take profits, but that's fantastic. I love it. I love it. All right. Apple's down a little bit. Google and Microsoft up. Meta down a little bit. Well, Meta, you might as well say flat. Tesla's down. All that fun stuff. All right. Whoa, I keep doing that today. It's like, whoa, extra effects. All right, over to Bitcoin. Oh dear, banana bread. Look at this. Look at all of this red. Bitcoin's down almost 2%, 1.87 down. Solana's down 3.61. Ethereum's down. And so is some really random coin I've never heard of before. Whoops, let's go in here. Find a coin I have never. Oops. All right. It helps if I'm actually. I didn't give myself enough space on the desk for the mouse. All right, here we go. Here's one. Beam. I don't know what this is, but apparently Beam is down a little bit today in the red. So two investors walked into a Beam. Ouch. Anyway, we'll leave that alone. Oh dear. That was my bad. That was my bad joke for the day. So I can't have any more bad jokes. I can only say things that are funny for the rest of the stream. So we'll have to see how that goes. All right. Let's bring back a big head me. Let's get caught up with the chat as we, of course, eye the clock as we get close to that. As we get closer to that 4 o'clock bell. G Marks is in the house with a hype. Let's do this. Sup all. Yeah. Marco is in the house. Hello, everyone. Canadian stocks still getting hammered. What gives? That's a good question. That's a good question. I looked at the catalysts that are out there. There's nothing really specific when it comes to a catalyst for today. We can't still be sort of saying, oh, people are still worried about rate hikes. Now, I know there were a few things that came out today. Actually, one of the big groups, analyst groups in Canada, came out and said that they think our rates are going to go all the way down to 3% by the end of 2025, and that we're going to diverge quite a bit from the States. I don't see that happening, but it was definitely an interesting read, and we'll have to sort of see. It's kind of that interesting thing. People are now beginning to sort of ponder about July. I really don't think we're going to get a cut in July, but people are pondering and people are worrying, as they always do. So for now, enjoy the red day. Buy up something that, perhaps something that prices come down where you think you can afford it a little bit better. So buying the dip, that's the best thing for a day like today. Ian says, only things I own that are up is PLZ and EXE. Anybody else have green assets today? Anybody who has NVIDIA has green assets today. So yeah, but I mean, Ian, if we go back, let's go back. We'll go back to the Canada. Whoops, we'll go back to Canada. Let's get rid of the losers. Bang, bang, bang. All right, we can see Dollarama. If you got Dollarama, they're up 1.68% today. I'm going to get rid of this here too, just to give us more green. So yeah, CP's up a tiny bit. WCN, Great West Life is up. Open Text is up a little bit. Oh, look at this, Fresh. Let's pull them up and take a look here. They're fairly, I guess, Fresh Factory. I don't even know who this is. They are on the TSX Venture. So I did switch the, initially I was only using the TSX. So I did switch to all Canadian stocks so that we can see things on the Venture as well. But Fresh is doing well. Canadian Tire. That's not somebody I would have really expected to see on this list. So yeah. And here, if we really want to get to the really big winners, we can kill out that one there. Let's get rid of this one too. Here we go. These are the really, really big winners. Boyd is in there. I've heard, and there's Go Easy. Go Easy was actually in our in the vote, but they didn't win. So they got 2 more tries, but they didn't win this time around. Capital Power's in here. So yeah, there are some companies that did make it in here. All right, let's jump back. I mean, up today. Okay, and Vineet saying hi and congratulations once again to Vineet. Enid says good afternoon and happy Friday. And here's Trevor. I'm back. Nice. We got a hola from Al Bundy. Vic Vens comes in and says, I know you love Solana and Bitcoin. I haven't seen you talk about DeFi technologies. They're up 2,000% this year. Staking crypto, not sure exactly what they do, but check them out on the Neo exchange. Okay. I will look. I will take a look at DeFi. It's one of these things that has never, to me, it's kind of one of these things like, there's a lot of things in crypto that have made insane amounts of money, but they're just outside of my comfort level. They're outside of my risk level as well. And sometimes I know, sometimes I'm looking at something and I'm like, okay, that could be a really great opportunity, but I pass on it because I'm like, but it's also a great opportunity for a rug pull. So I do tend to be a little more cautious, but I will definitely take a look at DeFi. So that I will do. All right, and here's what I'm going to do right now. Just give me a second. I just hit Command Shift 4, and what that does is it lets me take a screenshot. So I've just taken a screenshot of your question. And that way there I'll know to take a look at some DeFi technologies. And that way there, ask me about it on Sunday. I'll look at it before then. All right. Let's see. Vineet says, haha, I was thinking about winning again. Oh, well, there we go. Somebody who was confident, and that confidence turned into a win. So yeah, not too shabby. All right. Good Vibes is in the house with a hi all. And we got Stan Gray saying happy Friday, all. And Enid saying, Red, my eyes hurt. Yeah, absolutely. Absolutely. Vineet says, I didn't get the joke, but I usually actually like your jokes. Okay. That's fair enough. Sometimes my jokes don't make sense. I have to, when a joke isn't working, when you have to explain the concepts to somebody. At that point, if somebody doesn't get it, I'm just like, let's leave it and move on to the next one. We'll see what we can do. Al Bundy says, I am up 7K so far. I'm pretty sure Al is heavily into NVIDIA, so that would make a lot of sense. Marco says, should I DCA more TD and BNS? DCAing, if TD and BNS are part of your plan, your overall planning, DCAing is always the way to go. So I will definitely say that. AQN, there we go. Algonquin is up. Not too shabby. Not too shabby. Oh, we got about 2.5 minutes to the bell. Ian says, I had around $5,000 worth of Capital Power. Sold it a few weeks ago. Okay. Let's see. Their PE is way lower than Hood and Coinbase. That's DeFi Technologies, right? So I'll have to look into that one a bit more here. Let's see. Prairie says, Yaza, late to the live stream, but made it in time for the all-important bell. Yes. We're about 2 minutes out from the bell. Ian says, Blossom says I'm down 0.79% today. Not horrible. That's not too shabby. You're going to have days when you're down. You're going to have days when you're up. You're going to have flat days. You'll have all the days. So I always say, don't worry about it too much. Mary hasn't shown up yet to remind you guys to hit the like button. So I'm going to do that in her seed. So hit that like button. And today I'm actually drinking bubbly. For the simple reason that there was a slight accident in the kitchen just before the stream, and a bunch of soap ended up on the hot water kettle thingy. So have to clean that before I can make coffee again. So it's on the high priority list. There just wasn't time before the stream. So I am enjoying my bubbly sparkling water. I'm going with the pineapple today. Pineapple. There we go. It's good. Didn't taste as blue as the coffee, but hopefully you guys have hit that button a little bit. All right, we're down to about not even a minute. We're about 50 seconds away from the bell. I'm getting this thing all ready. Here we go. It is here. It's ready. We'll give a good one just to sort of end the week on a strong note. Then once we finish that, once we've got the bell, I want to talk a tiny bit about the changes to the capital gains tax, and something I read today that I thought was rather interesting. And I also heard somebody else's opinion on the exact same thing, which is a little different, but it's also interesting. We're going to cover that here in a moment or so. We got about 10 seconds, and Nine's in with an unholy banana bread. Holy cow. I always feel like I feel like I shouldn't say it. It's like, I'm being bad. Okay, here we go. Here we go. All right. I came onto that one extra hard just to end the week. We're now officially in the weekend. So that's kind of cool. Sit back, take off your undo your tie, take off your shoes, just relax. It's, you deserved it. The week is done. All right. Ian says, initiated the move to Wealth Simple today, told me I would get a 1% match. Looking forward to that. And Y Videos goes, wow, what an energetic bell. I put a lot into that one. I definitely put a lot into that one. And of course, a big old hi all from Y Videos. All right, we're going to go back very quickly, see if anything has changed with, sorry, beep, boop, boop. There we go. I was just fixing the chart that we had eliminated all of the red from. So let's go back here, and I should probably bring you guys along. Let's go back here. We'll take a look. This chart, by the way, on the side, this is Bitcoin. So this is kind of what happened here. We had that big rise yesterday, big fall, and then it's been moving kind of sideways. So we are actually starting to, and you guys are here. Let's do this. All right, let's get a trend line here. Let's just start it down here. So it looks like we're starting to get some kind of pattern starting to form. I think it's still a little too early, but it does look like we got a little bit of a wedge happening. So that means that it's probably going to break either up or down over the weekend. But anyway, that's Bitcoin. We're here for this. Look at this. So the TSX had a little bit of a late day rally. So they were down almost 0.5%. They made it up to negative 0.27. So they did have a stronger finish. That's not too shabby. S&P 500, you might as well say that that's pretty just flat. Negative 0.04%. NASDAQ finished in the green. Gold finished up. Well, gold is still going. Gold up 1.36%. Silver full 2 and a 2 and 0.7%. It keeps changing as I go to say it. And Bitcoin, a little better, but not that much better. Negative 1.85%. And our final heat map, still pretty darn red. Things are still looking kind of dismal. TD almost got back to even though. Look at that, negative 0.04. So that's not too shabby. Dollarama, once again, we'll pull them up. They finished pretty strong on the day. Now they did have that big drop yesterday, but they made it back. They made it back today. So there's nothing too shabby with that. VFV on our ETF heat map, they did not make it back. They did not. Let's take a look and see who did okay. So here's a few ETFs that actually did okay today. Here's ZID. So I believe this is the India one. So let's just take a gander here. Yeah, so this is the India ESG Leaders Index. So India is that market that I think India has a lot of potential. And they've now, because India, one of the things, India this year has moved from being number 2 in world population. They jumped ahead of China. So they now have more people in India than anywhere else in the world. And a lot of countries are starting to move move their business there. So where China used to always have that monopoly on, manufacturing and things like that, that's moving to India. And they are building like crazy over there. That's part of the reason that Hammond's been doing so well too, because they do operate out of India as well. And they have a lot of business over there. But India is, they're a market that's on fire. Their stock market's doing fantastic. So that's why something like this, the BMO, even today when things are falling, not the India ETF, that's for sure. All right, so there we go. That was the one I would sort of jump out on. And some of the QQ ones, like there's a QQCE is up a little bit. So you can see there's a few little ones in here that are doing kind of doing okay. All right, over here to the U.S., good old Uncle Sam's stock market is not looking too bad. It looks a little bit less red than us, but you can see Nvidia. Nvidia is still doing it. I know I pulled them up last time, but I just like looking at this. Look at this. This is just fantastic. And they're doing well right now. Actually, be interesting to see here. Let's just come back here for a second. Let's go over to Nvidia and see what they're doing in the after hours. So right now, they're still hanging out. They're still hanging out at the same price that they closed at. So they haven't had any movement. But no, now they're down a penny. They're down a penny in the after hours. So what can I say? All right. And finally, the crypto. Once again, a lot of red here. This can change over the weekend, but yeah, what can I say? It's just a lot of red. And we already did our random crypto stock or crypto coin that I've never heard of before. And hence we had the beam thing. So that was the one that Vineet did not get. I feel like I should explain it now, but I don't want to. Fine, I will. I'll explain. This is for you, Vineet. So I said, two investors walked into a beam, and then I went, ow. So like a solid beam, they walked into it. Kind of like a pun on the walked into a bar thing. Anyway, there we go. Let's come back to full size here. All right. We got Jackie in the house. Just wondering, how can National Bank offer free trading? How do they make money? It's a kind of the same thing. It's like all the brokers do this. So like you take today when the market is down. So, well, here, let me give you an example. This will be kind of cool here. We'll go right back to, let's pick, we'll pick Alimentation Couche-Tard. Let's pull them up here. So we're looking here at Alimentation Couche-Tard. So on a day like today, where they're down, at $75, well, National Bank's going to buy them. They're going to buy a bunch of these. So they'll have bought these at $75. So let's say, actually, you know what? I'm going to go back here. Let's say that back here, we'll go back to here. So right here, when they were $74 on December, that was a low for them, and National Bank would have bought a bunch. They'll buy, because they're buying the dip. So then they hold those in stock. So when you're on National Bank, and let's say, Alimentation Couche-Tard's doing great, and you're getting excited, and people start to give in and say, oh, I got to get some. It's going crazy. And all of a sudden, they're buying at this $86.19. Well, National Bank bought them at, like I said, 74. So every stock that somebody's buying at 86, they bought them at a lower price already. So that spread right there, that's where they're making a whole bunch of money. So, they're looking like they love these red days. And, they have a team of people who basically do buy the stocks. These are people using technical analysis. They're looking for every little tiny nook and cranny that they can get something a bit cheaper. And then they can, they'll sell it a bit later. And that's the whole thing. Like you take, and if you looked back, let's say back in the pandemic, when they declared the pandemic in March, we had that giant crash. Companies like National Bank, all of the banks, all of the brokers, let's just say, we'll just put it down to brokers, they were buying like crazy that day. I would be surprised if they had a budget. They probably blew their budget that day buying stocks. And then as we went into a bull market right after that, they were selling them at some all-time highs, these stocks that they got at that pandemic drop. And just to sort of give you an idea of the pandemic drop, we'll go to CNR. Why not? We'll just use CNR. All right. And I have to go beyond 3 years. We're going to go to the 5 years. So here we are. So look at CNR. They were coming along around $120. Pandemic drop. Bang. All of a sudden, $20 discount on CNR that day. I can guarantee you National Bank was in there buying. And then it went all of a sudden, a few months later, it was $145. So every single stock of CN that they would be selling, that they bought down here, they're making like $40 off of every one. And if they managed, and depending on how many they bought, if they're at the point now where it's up like $170 in that, well, 167 right now, that's an incredible amount of money. So that's where they make a lot of their money. Also, when you look at, so let's say National Bank, when you're moving money from Canada to US, so into your US account, they have a fee for that. So there are some fees that are there. If you do not, they have an annual fee if you don't hold a balance of, basically, if you're holding less than $20,000 a year, there's a fee that you would have to pay, an annual fee. I don't think it's a lot, but it's just one of those ways that they can make money. So it just works that way. So it does make it pretty simple. All right. Patricia's in the house with a hi. Hello, Patricia. Hopefully your day is going well. Let's see. What a big nothing burger of a day. Yeah, I mean, not a lot happened. Not a lot happened today. Yeah, it was just one of those days. What can I say? And how's it going, everyone? Mary's finally in the house. I did that. I did the thing, Mary. I asked everybody to hit the like button in your name too. I even quoted you. Al says, "Hi, Ricardo. I finished plus $6,641 today. Anytime it is up, I am happy." Oh gosh, yeah, absolutely. And Ricardo finished $4 to the goods. Oh dear. Hence why my nothing burger. There we go. There we go. Vinny says, "Thanks for the analysis on AP.UN. Hey, no problem. No problem. You guys, and that's a great thing about this channel, is that you guys get to vote on who I do. So in a way, I don't have a choice. But yeah, it was fun. I actually was very interesting too. Like, I had some preconceived notions of what was going on with AP.UN. And when I got into the actual data, I was actually pretty happy. I was like, oh gosh, you know what? These fundamentals are better than I was expecting. So yeah, definitely enjoyed it. This emote says it's a goblin. Oh, is that what that means? Goblin? Cool. Vinny says, one of my favorite stocks right now. If they don't cut that dividend, it can't go wrong, I think. Well, they've got the cash flow. So the dividend, there's no real imminent threat to that dividend. And as interest rates come down, that's going to help them. And we're just going to see, I think REITs right now are those stocks that, even if you just want to ride them back to where they normally go, because normally with a REIT, you don't have a lot of movement. Like, let me show you. Let's pull this up here. Let's use RioCan. Why not? We're going to go to RioCan. All right, and we're going to come out here, and we're going to look at the 10-year. Here we go. So this is normally what happens. So normally, you don't have a lot of, you have some volatility, but you normally have like an average. So with RioCan, for example, it's around $26. And they're kind of fermented. Like, yeah, you can drink RioCan and get a slight buzz. No, they're designed that way. And because what's happening with a RioCan or with a REIT in general is basically they don't want to pay taxes. So they're passing off all of their profits, and they're passing it off before taxes. So no taxes have been paid on it. That's why if you're holding a REIT outside of a registered account, you're paying 100% tax on that. So you've got no breaks on that dividend. It's 100% taxable. So that's what they're doing. They're just giving it to you. Now, because most people do realize that, they put the REITs in their TFSA or their RRSP and they pay no taxes. So it's a great way for, it works well for the REIT, works well for the taxes. Well, then all of a sudden, here it is, the pandemic. The pandemic came along and these guys got depressed. They got beat. Now they started to slowly start recovering and they almost got back. I mean, they did get back to where they were. And then we fell into a bear market. And now this would have turned around a little bit. Like, this would have turned around if it weren't for the fact that not only did we have the bear market, we then had the interest rates going up like crazy. So that kept them depressed. So you take a stock like this right now sitting at $16. This is a stock that's normally about $10 higher than it. So potentially with this bull market, we should hopefully, by the end of it, we should hopefully be back in our normal range, anywhere from 25 to, well, heck, even as high as 29. But I would say we should be up around $25 at the end of the bull market. So that's not going to be this year. That's probably going to be towards, maybe closer to the end of 2025, early 2026. But so you're going to have that. Now, when you look and people say, holy cow, look at this dividend yield, 6.6%. Yeah, that's 6.6% down here. But once we do recover and we get back up to where we normally are, that yield it won't look as impressive, because it won't be 6.6% anymore. It'll be closer to maybe 4%, something of that in that nature. But here's the thing. If you bought it at this, so if you bought it at $16.70 and it goes back up to $25 and this number comes down to, let's say, 4.5%, it doesn't matter that that's at 4.5%. You're still getting the 6.6% compared to when you buy it, because that's the whole thing. So it doesn't mean that you're going to all of a sudden get less dividend because this number starts to go down. It just means people buying it at the higher price are going to get, well, they'll get the same dividend, but they're going to get less dividend for what they invested into it, because that's what the whole yield idea is about. So not too shabby. All right. Let's bring me back up to Big Head. All right. Let's see. DAC mid-out is an overrated. I don't know who that is. Okay. Let's see. What do you guys think of AGNC? I was thinking of buying about 100 shares to yield 17% in dividend and also do a reinvest of 1 per month. So I don't know AGNC, but let's take a look and see if it's in here. AGNC. All right, here we go. So AGNC Investment Corp. Hopefully I think this is the right one. It's a U.S. stock. Let me just take a quick gander. I'm going to look at their 3 years. So they've been coming down a little bit, but I'm thinking from their name, they're probably into investing or finances. Let's see here. Okay, real estate trust. Okay, there we go. That's fine then. The fact that they're a real estate trust, I kind of know the general idea of the market, and that's not that unusual for that. Their dividend yield right now is showing at 14.59%. That's high. It's definitely high. But, I mean, this will come back down. Now, with the U.S., it's still the same general idea. Like, they're still passing on all of their profits to you. And I believe in the U.S., there's actually a legislation in there that guarantees that they will do that. Whereas in Canada, we don't have that legislation, even though that's what they do. But I want to take a look. Let's take a look and see what they've done here. Let's see. So yeah, yeah. So they've been consistent. I can see the 12 cents that's been coming out here. So I do like that. I like that they're being consistent. That's not too shabby. All right. Whoops. I did not mean to go all the way back. I just meant to go to the top of the page here. So let's see here. Return on equity, it's at least positive. Some REITs are struggling in that area because of, well, the higher interest rates. And I believe the U.S. was kind of singing the same tune as Canada back in the pandemic, saying that, we're going to have low rates forever. Not forever, but for a long time. Nobody was expecting it, especially even REITs. A lot of times they were adding to their, properties and things like that. So this is not too shabby, but look at this. This I love right here. So this is their debt to equity ratio. We're looking at 10%. Or sorry, 1%. 1%. That's pretty good. So when you have a REIT and it has next to no debt, that's really good, because when you think about it, if you're buying real estate, you're taking on mortgages, you're taking on debt. These guys have not been doing that. Let me just double check here and make sure that they're actually holding the property themselves, because let's see. All right. Let's see here. They're a real estate investment trust that invests in, they're mostly investing in the securities themselves, but that's fine. But yeah, they're still in a situation where they don't have any debt. And I do like that. So I think this is definitely This is not a bad stock. This is not a bad stock. Now, for those of you in Canada are thinking of holding this, this is something you would 100% want to put into your RRSP, because if you put that into your TFSA, you're going to lose 15% of that as withholding tax. The IRS will take that, and you can't get it back. It's gone. So that's just one of the things to keep in mind. So definitely not a bad looking stock. All right, let's get back here. Ricardo says, 9, did you see the yields plummeting? I'm so happy I got my 2-year bond with 5.03%. Yeah, and some of those GICs are going to start coming down too, as we look at rate cuts. And we'll have to see when the next one is. I'm praying it's not July, and I'm sticking to my guns on this one. Not July, not July. Prairie says, Wealthsimple made no money off of me today. Put in a limit order for some CTC.A before I went out to run errors. Order was filled at 5 cents lower than my order. Nice. You got to like that. Yeah, really got to like that. Bismarcky's in the house with a happy Friday, all. All right. Let's see here. I don't know what that is. I am a noob at stock market stuff. I just got lucky and dumped my entire retirement on NVIDIA back in March. I didn't diversify, and it has been on fire. Exactly. But, and this is where the thing is, if you're doing something like what Al's doing, you want to be paying attention to NVIDIA. Like, you want to big time be paying attention to NVIDIA. Like, I would in that situation, I would have Google alerts set to anytime somebody mentions NVIDIA. So you're going to get a lot of emails. But, if something changes, so let's say there was a scandal or something, you want to know about it before you want to be one of the first to know about it, because then you can sort of get in there and maybe take those profits in case something's going to happen. Now, the beautiful thing, though, is when it comes to NVIDIA is so far ahead of all of the other chip companies. I heard somebody the other day on the news saying that most of the companies are about 10 years of research behind NVIDIA. So it's kind of an interesting thing. And that could be really, really good for people who are holding NVIDIA at this point. All right. Jackie says, thanks for the explanation on how National Bank moves the money. Do other direct investing bonds like TD make money that way? Also, Plus charge everyone $9.99 per trade. Yeah, they're going to do that too. There's no reason why you wouldn't. Because that to me, and I don't even look at that as that's not being shady or anything. It's just the way business works, right? So the advantage you have is that when you're ordering, when you're buying shares, you're going to pay whatever the market price is, because that's just the way it is. So if they're smart enough to say, well, let's just buy a bunch of them, pre-buy a whole bunch of these shares when they're cheap, so that we can fulfill using those shares when somebody buys them at a higher price. That's good business sense. I don't like the fact that they're still charging like a crazy amount per trade. That's crazy. It's actually weird. When Wealthsimple came along and they had their commission-free trading, I thought, great, this is fantastic. This changes things. Well, when National Bank came on board and said, you know what, we're going to do it too, I was like, this is really good. I honestly thought that would be the sort of like the catalyst for the other, for the other big 5 in the 6 out of the 6, for the other big 5 banks out of the big 6. I thought they were going to start to follow suit. And they just didn't. And I think part of it is they're like, that's fine. National Bank isn't that big. But, once, of course, this deal goes through with Canadian Western Bank, National Bank will be a little bit bigger. But I'm surprised. And now that we're starting to get more brokers that are popping up that are offering commission-free, like I think Mogu is one that is commission-free. Maybe, also Desjardins. Desjardins has a broker and they're commission-free as well. So there are more options. And as you get more and more options, I think the big banks will eventually have to sort of look at maybe going that way, because they can make a lot of money if they're smart and they do their buying the dip. They can make a ton of money doing that. If I had the money to start a broker, I'd be doing that. Absolutely. Okay, let's see here. All right. Well, trying to get here to Marco. Is now a good buying opportunity for Air Canada? Let's take a look. Let's take a look at good old Air Canada. Air Canada is one of those things that back in the day, when it first started going down with the pandemic, for me at that point, any price under $20 was really a good place to get in. So I'm going to come back to the 5 years. Let's come back to the 5. So you can sort of see Air Canada used to be, and we'll even go to 10 years here. Air Canada before the pandemic, they've been doing well. They've been doing well. They have peaked up around $40. Then you had the pandemic. So now here's the thing, though. I'm going to put this out here. So if you look, though, this last basically from 2018 to 2020, this was a huge buildup for them. But they kind of, it's almost like they lost that whole little section up there, and they did lose a lot. There was a lot of dilution. So getting back to like $40, $50, that's going to be tough for Air Canada. They diluted a lot. There was a lot of dilution, so I don't see them getting back there anytime soon. So we're in that situation though, where I think a long-term goal for Air Canada should be about $30. I think that's doable, but I don't think not much higher than that. It'll take them a long time. So when I say a long-term goal, I'm not talking about, by the end of this year. I'm saying within the next couple of years. I would say even 2 to 3 years, they might be able to get back to $30. So right now, I think anything below that $20 mark, I'm going to stand by that. I think anything below the $20 mark is not a bad entry point, especially if you're going to hold it for a longer term. If you're looking for a fast, quick fix, it's not the stock for you. Even if you're looking for a swing trade, it's you might be able to do a little bit. Like I have done some swing trades on Air Canada before, because every so often they do get themselves into a nice little channel that you can play. But nonetheless, I would say if you're DCAing and you're looking just to get in on this for a long term, any price below $20, I think, is absolutely not a bad place. I think you'll get your money back. You'll definitely get your money back. So that's not too shabby. So I kind of like I'm sort of thinking here. Oh gosh, why I should probably. And I have every so often I have bought. Like I think I had some Air Canada as well, and yeah, I did. But I bought somewhere's in this vicinity here, back towards the last part of last year. And I bought it somewhere's like at 18, and I did end up selling, I think around 24. I'm like, I don't see it getting much higher at this point. And luckily I did, because then it went down again. So just something to keep in mind. All right, let's bring up Ian. So probably not a question for here, but I moved my managed RRSP today. They have to liquidate before the transfer. How is that going to affect my bonds? Take a hit? Probably, yeah, because they'll have to sell your bonds. So if there's any kind of penalty for selling them early, you may certainly take a hit, unless, and this is what I don't know, and I don't know this, I will say this here, unless they have a way that they can actually transfer them straight over. It's kind of an interesting thing. So, let's back up a minute here. I don't even know if they have to liquidate everything. I know, for example, I think National Bank says that they could move stocks, but as long as they're whole stock. So I don't think it's a situation where they have to. No, I don't think they have to sell them at all. I'm pretty sure, Ian, that they should be able to transfer them as is. Anybody who's done this, please clarify in the chat, because I've never moved stocks from one exchange to another, but it seems to me that I read something that a national bank said that for moving stuff from like Wealthsimple, for example, as long as you were moving whole numbers, they were good. They said something like you'd have to sell anything that's a fraction. So that makes me think that you might be able to do it without them having to sell things. So I don't know if they're going to liquidate, depending on what it is. Just double check. All right, let's see here. Let's see, REITs, because the main reason is an actual house in the USA. You can deduct depreciation which is a huge tax write-off compared to Canada. And that would make a lot of sense too. That makes sense. That makes sense. I didn't think about that, Al. Perfect. All right. Let's see here. But REIT stocks have to give 90% of their taxable income to their shareholders in order to be considered a REIT. Yeah, I think that's especially with the US per se. Let's see. Marco is saying REITs are weird. I wouldn't touch them. All right. All right, let's get back here. All right, Ricardo says, well, it's a dividend play really since majority of times it's reliable. All right. All right, let's see. Vinny says REITs really got pummeled by so many factors at once. Yeah, absolutely. Especially those office REITs. So for like example, AP.UN, they had to deal with some of the downsizing some companies were doing when it comes to office space. So that was kind of like that extra whammy. Let's see. Hence why I don't buy cheap and ride high. All right. What is the 1% match all about with Wealth Simple? I think isn't that part of the mortgage thing? I think so, but they'll clarify that for you, Vineet. JJ says, howdy. Good day. Good day, JJ. Good to see you. All right. I'm going to have a drink. I think. Oh, there we go. It's not as good as the coffee. Not even remotely as good as the coffee. But, I mean, it's still good, but in a different way. All right. Let's see. Think of it this way, which is how I viewed it. If you put down $50K into a $250K rental house purchase and it goes up, your $50K goes up. But also the other portion that you didn't pay for, the $200K, also goes up. So, yeah, it kind of works that way when you're looking at equity at a house. So, if it goes up, both sides kind of go up at the same time. And that makes a lot of sense. Let's see. Your yield on cost would actually go up because of the slow increases, even though the yield will go lower officially. All right. And let's see here. You get gains on the loan you leveraged. Okay. All right. Let's see. And the rents you get from your tenant are paying for your loan. That's an interesting thing. When you are looking at real estate, I mean, some people will buy a rental property and then rent it out basically to cover their mortgage. That's the most ideal situation that you can have, where you can own a property and you've got a tenant in there, especially if you've got a good tenant that's in there paying off the property for you while you're pretty much doing nothing other than perhaps some maintenance here and there as needed. But that can sometimes be really, really profitable, especially if you get to a situation where they're not only paying off that mortgage, they're also, maybe paying a little bit more. So that's not too shabby for sure. Jonathan says, I got held up at work and I'm late. Uh-oh. Well, hopefully the police caught the guy. Hopefully. I'm joking, by the way, Jonathan, because you said you got held up. Never mind. 9 says, the thing I hate about real estate is property taxes and taxes on rental income. My main goal is to avoid tax legally. Yeah, absolutely. Well, that's the thing. Avoiding tax is huge, and there are a lot of legal ways that you can do it. So that's not a bad goal. Not a bad goal at all. Ricardo says, I only view low debt companies. Okay, fair enough. All right, let's see here. Plus, on top of that, you get deductions from depreciation, which drops your tax bracket a ton if you make over 100K. And that's, once again, that's the whole thing. It makes sense. Oh, Vineet says, oh, I heard bean. Makes sense now. Okay. Amvas is in the house. Hi, all. Late for you and lunch, but we'll listen to replay. Appreciate your thoughts of RSETF instead of individual REITs while waiting for a pullback. Thanks, and TGIF. Yeah, so RS, let me pull that up for you guys. All right, so RS is basically, there we go, Real Estate Corp Class A shares. So it is I think it's a split core here. Yeah, exactly. So real estate split core. So it's like other split cores. Now I'm actually looking to do, I will this summer be doing a new split core video. So just sort of, for those of you who are fans of the split core, but let's come back here. I'm going to come back 5 years on this one as well. So it hasn't been around that long. It's been around since 2020. Did okay, but it's been kind of on the down since then. But as, of course, REITs start to improve and recover, we're going to see a little bit of recovery here. Now, this does have a crazy high yield, 13.254%. This is one of these ones that, as I mentioned before, a lot of times a REIT will, not a REIT, sorry, a split core, a lot of times they can cut that dividend when things start to get rough. I don't think this one did, though. And let me just take a gander here and let's see here. Yeah, we got everything in here. They've been paying 13 cents for a long time. Yeah, absolutely. So yeah, they had no disruptions, which is fantastic. In fact, at one point, we go far enough back. So this is 2021. They were at 10 cents. So they actually even raised that dividend. So it's definitely one where income-wise, if you're looking for an income, steady income, this is not a bad choice. But keep in mind, it is a split core, so they will be using return on capital. So you don't want to be holding these outside of a registered account, because otherwise, when things turn around and these prices start going back up, and you, let's say for whatever reason you sell, you're going to have a bigger capital gains tax than you're expecting, because your adjusted cost base will start to come down thanks to, thanks to return on capital. And it happens. It happens. Another one of a favorite for the community is Canoe. Canoe also uses return on capital. That's why I always say with Canoe, have them in a registered account and you're fine. All right, let's get back to here. Let's see. Marco says Questrade isn't bad. Free ETF trades and $4.99 for stocks, cheaper than the big banks. Yeah, Questrade's not a bad, and I know Canadian in a t-shirt. He swears by Questrade. So. It's not a bad, and if you're, let's just say, for example, if you are an ETF investor, so you're like, I'm not going to buy individual stocks. I'm just going to buy ETFs. I don't have to do all of this extra work. Something like Questrade is a really good option. Or in a case like if you're looking at the big six, there's many banks like Scotiabank's iTrade. They'll let you buy ETFs without a commission. But the danger with some of the big banks is that sometimes you may not have access to all of the ETFs. So if they have an ETF, if Scotiabank has their own ETF that offers pretty much the same products as a competitor's ETF, sometimes they will just not offer the competitors. It's your way of making sure you're using theirs as well. 9 says $10 per trade is insane. I would agree. Al says, I noticed the Quebec brokers are free. I don't know who the Quebec brokers are, but, Desjardins, I believe they're based out of Quebec and they're free. National Bank is based out of Quebec and they're free. So you might just be talking about the ones based out of Quebec. That could be. That's interesting. That is interesting. Other than, of course, like Wealthsimple is not based out of Quebec, but that's an interesting observation, Al. I like that. Ricardo says, that's crazy that Canada charges per trade. In the US, a lot of brokers don't charge. Yeah, exactly. Anybody in any financial stocks, like anybody has credit card companies? I don't know. 9 says, yeah, the commission brokers make you a lump sum investor or else you get killed by the fees. Yeah. And that kind of goes what's interesting about that is, I do come from that whole, chip and, invest what you can when you can. So if you've only got $10 to invest, get it in there, invest it. The whole nickel and diming philosophy, that's not a bad thing. But when you have a bank like that, you're kind of in a situation where if they're going to charge you $10 a trade, you almost have to just sit on the money until you get enough money to sort of make it worthwhile. Because, if you buy one stock and it's going to cost you $10 to buy that stock, well, that stock needs to go up $10 in price for you to break even. So yeah, it's now if you buy two stocks, they only have to go up $5 in price for you to break even. So you kind of have to sort of factor that all into your plan. So that's never a good thing. Let's see. 9, it reminds me of OTC stocks here in the US charging $7 per trade. Yeah, it's because Canada doesn't have a lot of businesses. because of high taxes. Yeah, there's definitely high taxes here. So there isn't much competition that leads to a lot of, it does lead. We do have a lot of oligopolies here. So yeah, absolutely. Like our banks, our telecommunications. Yeah, there's a fair number. That's for sure. Banana bread in a t-shirt. I love that one. Trevor says it was the fees that stopped me from stocks earlier in life. Yeah, I can understand that. Can you just have the money parked on a money market account in Canada, or do they charge you to put the money in? There's places you can park money. So one of the things that you can do now is nowadays, the problem is if you have a bank. So we'll start with banks. So with the banks, so your traditional six, unless you have a certain balance, so they're charging you a monthly fee just to have your bank account. So a lot of banks, they're charging you like anywhere from $15 to $20 a month just to have an account. Unless, of course, you have, I think in most banks, it's somewhere around 15,000. If you've got more than that, they usually will waive that charge for you. But now that we have things like Wealthsimple, so you can park money in Wealthsimple. They even have a little cash area you can put your money in, so it gains some interest. You can park it. You can park it on any of your brokers, of course, but it's not doing anything if it's just sitting there as cash. So usually for something like that, that's where those cash ETFs are a good way to park it. So you park it in something like cash, for example. You're making like what is it, 5%? So you're making about a 5% on it every month. So at least if it's, if you're planning to park it there for any amount of time, you're at least getting something for it. Now we do have accounts as well, like things like EQ Bank over here. I think I don't know what percentage they're offering anymore. At one point I thought it was 4%. So, definitely there's lots of ways that you can get a little bit of money on parked cash. And that's kind of that thing, like with with an emergency fund. So you don't have to, you shouldn't have all that money like sitting under your mattress waiting for an emergency. You want to park it somewhere where you're going to at least make, maybe 4 or 5% interest on it. So you're getting something. Because that just makes sense. It's like, make it work. Make your emergency fund work a little bit for you. All right. And here's the interesting thing, though. I will put this out here. Now that we've gone from a T+2 to a T+1, it is making it a little bit easier to get money out of your investments. A little bit. It still takes a good amount of time, but not as much. So basically a day less. So that's not too shabby. Al says it would be hard to be a day trader in Canada. So yeah, the big issue in Canada is you don't always have those volumes that you want to be able to play with. So in the US, you have so many more choices, so much more volume. So you get a good volatile stock in the US, and you could really get into some pretty good grooves with it to be trading the ups and downs. So not too shabby. AC Dats says, so far I'm happy with Wealthsimple. JJ saying 4.5% with Wealthsimple Cash for premium. There we go. There we go. And then 9 says there are decent cash and T-bill ETFs for your TFSA to avoid interest tax. They work like money market funds. I think one of the cats is playing with the door. I keep hearing it. I'm like, what's going on over there? Jackie says I parked my money in cash.to, got charged $9.99 at TD. Oh my God. Jackie, no. I'm glad you moved over to National Bank. Holy cow. Yeah, that's crazy. Every time I hear that, it just blows my mind. It blows my mind. Actas says, I'm getting 5% with Wealthsimple Cash. So there we go. That's not too shabby. So dang, Fidelity and SPX gives you 4.97% to park your money. EQ, okay, it's only 2.5%. All right. See, I never know what it is. Muhammad says, interest is forbidden in my religion. That's why I'm sitting on over 50% cash in my RRSP. Ooh, oh, that's interesting. You see, I did not know that, Muhammad. Let me ask you this question. What about dividends, though? Are dividends forbidden as well? Or is it just interest? That's kind of interesting. Because I mean, dividends, it's hard to, if you have to invest and you can't have dividends either, that really limits what you can do investment wise. So The other question I have, you don't have to answer this if you don't want to, but I'm kind of curious. Why is interest forbidden? Like, what is it about interest that that your religion perhaps looks at it and says, that's not good. That's not good. Just out of curiosity, because I'd never heard that before. Very, very cool. Okay, while we're waiting for Muhammad and everybody else throwing in stuff, the stuff I was reading about the capital gains is that one thing about it, and this is really interesting, is that you don't have to even start the legislation before you can enact it, because where it's in the budget, they could have enacted it right away. They could have just threw the switch and said, okay, this is just the way it is. But they waited till the end of June, well, almost the end of June, the 25th. So there's a couple of different scenarios that I've heard that are really interesting of this. One of them is Pierre Polyev says, oh yeah, they did it so that that their billionaire friends can do their capital gains right away, so that they're not paying the new rate. Fair enough, maybe that is the case. But the other thing I heard, it kind of goes in a different way, is that the reason they may have done it was to encourage people to do that, because what that would then effectively do is these people who would not have normally cashed in and taken their capital gains, they're all of a sudden doing that, which means they're getting that 50%. So what they're doing is they're kind of like pushing some people to say, okay, let's get some tax money in here for the government. And that's kind of interesting. So do you think, let me just ask, do you think that it is possible that the government did this whole thing and they delayed the introduction of that tax just to try to shake out some tax money, to try to get a bit of tax money into the system? Then the liberals, they can say, oh, well, our finances are not as bad as we thought, and use that as maybe saying, hey, look, we got some money that we can play with the election without impacting things too much, because it is coming up next year. So just an interesting thought. Could they actually be doing that? Could the liberals be kind of that sneaky and trying this? So another question for you guys. All right. So Jonathan says, maybe we can throw a few gift cards at a TD employee and get them to waive the $9.99 fee. Oh, Jonathan, that's classic. That's classic. Yeah. Apparently, well, maybe if they're the TD employees in Florida, you can probably get away with that. But that's funny. Let's see. Ian says, yeah, the 1% match. If you move 10,000, you will get 100 deposited into your cash account. Okay. $100 spread over 12 months. So $8 a month for 12 months. That's how it was explained to me. Oh, okay. So this is just moving cash over. It's not like the mortgage thing. Okay. Interesting. There we go. Interesting. Okay. And good. You dividends are okay. Most of my stocks pay dividends. Oh, that's kind of cool. Okay. And this is like the Quran, basically the Quran forbids interest. Okay. Interesting. I did not know that. I did not. Like, I don't know a lot about, I know about, what am I thinking here? I know that there's something about pillars. Like there's like, I think 4 pillars, something like that. That's about all I know. And please forgive me for being ignorant, because I just haven't been really exposed. But I think I remember reading somewhere that there's like 4 different pillars in the Quran, but I could even be wrong on that. So we'll just leave it at that. Let's see. Enid says, silver is up today. Yes, silver was definitely up. Mary's back in. Hit the like button. Yeah, absolutely. I'll have a drink. Will you guys hit that like button? So there we go. So good. Okay. Ricardo says, what are your thoughts on UGT? This is one I am thinking since the recession fears hit the US. UGT, I'm not sure what that one is. Let's take a look. Like, I feel like I've seen the ticker before, but or maybe I haven't. Oh, sorry, UTG. There we go. All right, so Reeves. Okay, Reeves Income. Okay, so Reeves Utility Income Fund of Beneficial Interest. Oh, that's an interesting name. Let's take a look right here and see what they've been doing. So they've been coming down. All right, that's fine. It's kind of funny. Like I'm like, oh yeah, they've been on their way down. That's fine. Nothing to worry about here. But I mean, it's kind of true. We've been through a bear market. I'm more interested in this part for the most part right now. So you have to kind of wave. Like I look at it this way. You have to sort of look at the benchmark of what you're, like for example, the S&P 500 and what they were doing. That's a kind of a good thing. So let me see here. 8.187%. That's pretty high. Okay. Let's see what they do here, first of all. Okay, so they're a closed-end management investment company. So it doesn't really give me a lot of information. So this is one I'd probably want to go to their webpage, but let's take a quick gander here into their key information. All right. So they're paying 19 cents. They seem to be paying it reliably. That's good. But I would definitely need more information. There's just not a lot of information here that I can sort of glean off of. All right. Trevor says that'll start another TD scandal. It probably. I have a feeling. This is the thing. The fact that so much keeps coming out on the TD thing, I just my gut says there's probably at least one or two more little things that'll come out before this is all said and done. But we'll have to see. Actas says, would the 5% paid for holding cash.to be considered a distribution or interest? That's a good question. That is I'm trying to think if it's, I would have to look that up. I would actually have to go to their site and figure that out. I don't think so. My gut tells me that it may not be interest, but I would want to I would definitely want to check that out. I think it's coming off as a dividend, but would want to check it out. Let me see here. Ricardo says, yes, it gets categorized as an ordinary dividend, at least in the US tax-wise. Okay, there we go. All right, we got Bryce is in the house. What's your thoughts on DOL.T? Is it worth buying shares near the 52-week high? So we're looking at Dollarama. Let me bring up Dollarama. And I know we were talking a little bit about them earlier today as one of the few stocks that has been doing really, really, really well today. And all right, I'm going to let's just bring up the 5-year story on Dollarama. So Dollarama, they've had this incredible, I mean, pretty much since the pandemic, they have been on a tear coming up the charts. And when you're looking at it, you can sort of see it's almost parabolic a little bit. Like, look at this. You can see like a curve. But we do have this little bit of correction here. So what's going to happen with Dollarama? Here's the thing. There's a few things working in Dollarama's favor, and there's a few things working against Dollarama. What's working against Dollarama is the rate cuts. Because as people start to get a little bit more confident, they might start to stray back to some of their traditional stores opposed to Dollarama. Because right now, as everybody has been afraid of a recession, people have been afraid of the higher prices, and as the rates have been going up, Dollarama was that affordable choice that many, many people turn to. So that really, really helped them big time. So what does that mean, though, for Dollarama in the future? As rate cuts continue, now it's going to take a while. And you got to realize, too, that a lot of people have, even with the rate cuts, a lot of people are going to be renewing some of these low interest rate mortgages especially 2025 is when most of them are going to happen. That is going to make things pretty hard for people. So for that reason, that's going to work in Dollarama's favor. So I think what we're going to see with Dollarama is I think it's going to continue to grow. I think we're going to kill, though, this parabolic motion. I think it's going to slow down a little bit. I think we're going to have a sort of I don't want to say a flat, but I would say a more leisurely trip up. So I do think Dollarama is going to still do okay. So going back to Bryce, and is it worth buying shares at the top? I don't think it's coming down, not anywhere significant. So when you see anything like this, or like, let's go back in time, when you were up here and you got this little correction, this is the time to be buying that dip, because look at that. Now you're up. Now you're way above it. So, and this here is another one of these little dips. I think probably a good place to get in. And then it's going to go back up again. I imagine that it's probably going to, well, let's take a look actually. So right now it's sitting at 123. I'm going to go into Simply Wall Street here. Sign in. Hello. There we go. There we go. Apparently the cat's being bad. So, all right. Let's come in here. Dollarama. All right. So right now, we got earnings forecast to grow. That's fantastic. But that's not what I am looking for here. I want to look at... All right, we'll come in here. Oh, let me a second here. Let's see here. This is what I'm looking at. This is kind of their projection on their price. So right now, what most analysts are thinking is, yeah, I was thinking this myself. I was thinking about $130 over the next year. And that's where people are thinking. So up about 5.2% from where they are. So I think it's a safe bet. I think it's a safe bet. You're not going to have the same amount, the speed of growth that we've had up to this point. It is going to slow down a little bit, but you're still going to do well. And I think long-term, you're still going to do well as well. All right, let's bring this back as we get caught up. All right, yes, have a great weekend, Ricardo. Alimentation Couche-Tard is not doing so well these days. Yeah, I know. They've struggled a little bit, but it's still one of my favorite stocks. I still have a lot of faith in Alimentation Couche-Tard. Jackie says, my only worry about Dollarama is most products are from China. I bought into Dollarama at $40. I'm doing well. But keep in mind, they're at, maybe most of these products are at China now, but as things start to shift to India, you'll see Dollarama, they're a smart company. They'll start sourcing things from India. You'll see it. That I have no problem about at all. All right, and that's just Ricardo wishing everybody a happy weekend. All right, everybody. I think we're there. This has been another great stream. You guys have absolutely rocked. Always good to see you guys. We'll be back, of course, on Sunday for this week. I'm looking forward to that. I have some, I got fun pictures and we got lots of good news. And there's even, I'll give you guys a hint. There's even a banana related story. So that's going to be cool. We'll see you guys then. Until then, enjoy the rest of enjoy the weekend. Hopefully you have a good one where you are. And hopefully it's going to be that first nice summery weekend for you. All right. Bye, everybody.